Hey everybody, it's Paul from Blossom, and
Hi, everybody. I'm Shawn, also from Blossom, and the YouTube channel Better Call Paul.
yeah. So guys, it's been 7 weeks now since we started our channel back on July 18th, and we just hit 4,425 subscribers. So thank you very much. And Shawn and I thought we'd get together today, grab a beer, and talk about stocks. So we're gonna open up our beers.
Cheers, everybody.
Yep. If you guys want to stick with us for the next half hour, grab yourselves a drink. Cheers. All right. So first things first, Shawn. How close are you getting to your $1,000 a month?
I am only $10 away. I put a few dollars in on Friday. I had some extra money. It was a payday. I bought a few stocks, put it on stock events, and now I'm up to $990.83 a month. Next week coming up with all my dividends rolling in, I guess starting tomorrow, right? We should start seeing some rolling tomorrow, Monday.
The ninth.
The ninth.
Should be on September 9th.
Yeah. So all week long, we'll have our dividends rolling in that we've worked hard for, and I will definitely be at the $1,000 a month mark, and I'm so happy that I'm going to be at that mark. For me, it's a very psychological mark for me. It's going to be a big event.
Yeah. I mean, congratulations, because I know you were talking about trying to hit that number by December. So how did you fast track it by what, 3 months?
Yes, I did fast track it by 3 months. I did have a few good months at work,
Mhm.
and had some extra large bonus checks. So I managed to be able to put big sums of money, like $1,500, $2,000, into my trading account, and I went on some really nice shopping sprees that teamed up with my monthly dividends, and it fast tracked it by 3 months.
Yeah. But now, I know we were talking before and you were telling me about some of the things you've changed lifestyle wise, where, before you used to go out and spend more money and now you're more focused. So, maybe tell everybody what you did.
It was a big, a big decision for my wife and I. We both have good jobs. We do enjoy going out for coffees on weekends, local coffee shops, have something to eat. But when you start adding it up, it's 45 bucks with a sandwich and two coffees. And we did like to go to the casino. We'd go once a week, at least once every 2 weeks, and we'd easily each spend $200-300. We made a commitment to ourselves about 5 weeks ago, 4 or 5 weeks ago, that no more casino. That's it. It's done, and we haven't been since. And that was one of the big changes of the lifestyle. I started bringing my lunch a few days a week to work, and it's amazing how quickly you notice that you have an extra 50, 80, $100 a week in your bank account.
Yeah. Guys, I would highly recommend, if you haven't already, give a few people a call. Call your insurance company, call your cable company, call around your cell phone provider and see if you can get a better deal. Because oftentimes, if you tell them you're leaving, you will get a better deal, right? You can save money that way. Okay, so let's jump into some of our favorite topics, which is ETFs. Shawn, have you heard of Evolve's new Biggie ETF that they're coming out with?
Paul, I haven't heard of it until you mentioned it before we went on, started recording
Yeah.
this video. I had to Google it. I had no idea.
Yeah, we were just talking about some of the things we were going to discuss in this podcast, and that was one of them. So, Evolve has come out with a competitor to our favorite HHIS, and they're calling it Biggie. So they're going to put together a portfolio of U.S. listed ETFs. Well, they're Canadian ETFs, but they're going to hold American stocks, and they're going to put them in a basket like HHIS, and they're going to launch that. Now, the nice thing is they're going to up the leverage to 33%. So they're going to go up and above Harvest's 25%. So, as I think Adriano said, they're evolving the fund of funds to make it a little bit more competitive, which I think is fantastic for us retail investors. I don't really know about growth stocks, but I know that being a covered call ETF income investor, it's just getting easier and easier, and making money has been like fantastic. It's been great. So
And, actually, Paul, while you're mentioning this, have they mentioned anything about when they're going to start the fund, what the monthly distributions will be, how often?
well, they're actually it's going to be bi-monthly, I believe, and I think they said they have an option to go weekly.
Oh, wow.
So Evolve might be the very first weekly payer in Canada, which would be also, I don't think it really matters if you get paid weekly, bi-weekly, or monthly, but it is exciting, right? It keeps you involved in it and gives you a chance to reinvest more often, which is nice.
I do enjoy
Yeah,
the days leading up to getting my distributions.
yeah, it's a dopamine hit,
Oh,
right? Yeah,
absolutely, way better than go to the casino
yeah, yeah. Keeps
because
keeps
this one I win.
keeps you investing for sure. So we're looking forward to Biggie, and then they're going to have a Canadian version, which is Maple, and I love that name, right? It's so Canadian.
That's
So they're
fantastic.
going to do the Canadian stocks as well, and we're looking forward to those coming out. I think I'm definitely putting it on my list of ETFs to start buying. Now, what do you think of Hamilton's zero DTE funds, the S Day, Q Day, and C Day?
I just started buying into them. Let me have a quick peek here. Which one
Yeah.
I bought first?
Yeah, so far
Um,
I've been buying Q Day and S Day. I kind of assumed they would have the higher yields because they're American listed. Q Day is just over 20% or around 20% yield, depending on your, I guess, your cost basis.
I just bought into Estee. I just started. I just bought 10 shares of it to get started with it, but it will
Nice.
be one of the ones I will increase this week coming up. And just from stock events, it says it is about an 18%.
That's right. That's right. So it's crazy, guys. This space is just insane. Now we recently found out there's also another provider in Canada called 9 Points. So now we've got another option for ETFs. Have you heard of 9 Points?
Just heard about it from you the other day, Paul.
Yeah, right on, right on. So
By
have you bought?
watching your video. No.
Awesome, awesome. Have you bought any 9 Points?
I did.
Yeah,
I bought the one which
I'm
was.
gonna guess which one you bought because I think I bought the same one,
Which
which
one
is
did you buy?
Shopify.
It was
Yeah,
absolutely,
yeah.
absolutely.
We're a little bit of yield chasers, so we like to go for the one with the highest distribution. And unfortunately, I never did invest in Shopify, and I probably should have at some point. But now we get a chance to buy Shopify and get paid monthly, so I'm excited about that.
Me too.
Some of the bonuses of 9 Points, their management fee is waived until February of 2026.
That's really important.
Yeah, share price is lower than Harvest, so $10 instead of 12 to
Yes.
start. So you can buy more shares,
And
and they're saying
the
that,
distribution was bigger too, wasn't it?
yeah. Do you know what it is?
It was 27
You
cents.
got it. Yeah. So I think instead of 25 cents for Harvest, it's going to be 27 cents. So you're getting a higher distribution on a lower share price. Now we all love Harvest, and they've proven themselves. So the
Definitely.
question is, can 9 Points do what they're saying they're going to do? Right? Putting out that kind of a distribution on a lower net asset value. So we're going to find out, anyways.
Time will tell.
I did buy both, by the way. I bought the Harvest Shopify. I bought the 9 Point Shopify in equal amounts, and I'm going to buy about $1,000 of each. And then we're going to have like a case study to see which one does better.
I did buy both as well, but I just bought equal dollar amounts. I didn't buy equal share amounts.
Yeah.
Just to see how it goes.
So Shawn and I do like to gamble a little bit, and he's into GME, and I'm in an Alti. So those are kind of like our gambling portion of our portfolios. So I know you just did a video on GME, and maybe we can share the link in this video as well. But so what's happening with GME?
Well, as everybody knows, next week will be their quarterly. Oh my gosh, why am I drawing a blank of the word here?
Earnings.
Earnings. Thank
Yes.
you. Oh
Quarterly
my
earnings.
gosh.
Yep.
Quarterly earnings. Now, anybody like me that has followed the GME saga for the last 4.5 years, and I've been involved in it for the full 4.5 years. My wife makes fun of me on a daily basis for it.
Yep.
But it is my little gamble in my portfolio. I have about a 20% of my portfolio, which is a little high, but it's about 20% of my portfolio. And I expect big things coming up. The last year they beat the last 3 quarterly earnings. Some of them quite large. I believe one was they beat it by 13 cents.
Wow.
Yeah, it was very impressive. Um, so I'm expecting some fireworks to happen in the next week or two. We have some ETF rebalancing coming up on the 19th of September, I believe. And between that and GME's earnings next week, I really think we're going to see some fireworks, some definitely upward movement. I'm hoping to see somewhere in between the $30 and $35 range. And I think if we can get to the $35 range, and this is where my little hopium, my tinfoil hat comes on. I think once we get to the high 30s, we're going to see an explosion up towards 50.
Wow.
Yeah, I think they've proven themselves. They changed their business model, and it's really become a very profitable business by eliminating unprofitable stores and increasing the footprint in collectibles. And now they have the online trading packs you can buy, which is fantastic, making tons of money. And not to mention even the PSA grading you can do of your Pokemon cards, sports cards, and you can do it through the GameStop stores, and they make a profit off it.
Wow. So it sounds like they've really turned their business around. I know some people were commenting on your video and my sharing your video on Blossom, saying that it's just a meme stock. But it sounds like I'm hopeful. I have a few shares left, not many, but I'm hopeful that it would be nice if it hit $50. 35, 40, $50 a share would be great for sure. Now you mentioned your wife was making fun of you.
Yes.
So what does your wife think about covered call ETFs and all this kind of investing? Because I know my wife does not trust it. She's sticking with her Bank of Montreal mutual funds, and I'm trying to convince her that she's losing money, but she feels safe in that route. So she did deposit some money into Wealthsimple that she lets me manage, and of course, every day she looks at it is a red day, and she tells me I'm losing her money. And then I go, babe, you can't look at the one day. You have to look at the all-time return. You're up like 30%.
What do they say?
What do you say? Oh, that's not enough. That's not good enough.
What do they say? When in doubt, zoom out.
Yeah, exactly. Right.
See the big picture.
So is your wife kind of getting on board with this or not?
I've slowly started to get her to turn a little bit, to buy a few of them here and there. Like your wife, my wife was into buying Royal Bank and other blue chip stocks like that. Because her big question is, if it's this easy, why isn't everybody doing it?
Yeah, that's a good question.
I asked the same question. Why isn't everybody doing it?
Yeah.
I think I'm doing quite well. Obviously, Paul, you're doing very well.
I know now Wealthsimple, and we love Wealthsimple, guys. So if you're looking for a platform, go for Wealthsimple. You can sign up through our link or any way you want to sign up. Doesn't matter as long as you do. They now have a feature on Wealthsimple where they'll compare your portfolio to one of their managed portfolios. And their aggressive portfolio in the last year made 14%. And according to Wealthsimple, I made 30%. So, and guys, I've said it before, I'm just an average guy, right? I'm not highly educated in this stuff. I'm self-taught. I watch YouTube videos. And if I can get 30%, I think I'm doing okay, right? Especially when I'm investing in a product that everybody keeps telling me is going to lose money. Yep. So I think it's pretty easy if you just do a little bit of work.
It is. I try to spread the word even at my work. Our CA at work, our chartered accountant, he asked me, Shawn, how big is your portfolio? So I tell him, and he asked me, how much dividends are you getting every month or distributions? And I tell him, and he's like, no, that can't be happening.
You're not true.
No, it can't be true. You're at you're at 40%, and I was like, yeah, that's what I'm getting. And I show him the proof. Like, here's my Wealthsimple account.
Is that your yield now? 40%?
It's pretty darn close.
Yeah, I think I'm just over 30%. So right. I'm slacking. I got to catch up.
But sorry, it's amazing, and I have actually had a few people at work now create Wealthsimple accounts, and they've funded them. Not just what they can afford to fund, whether it's $100, $50, whatever. And I told them my story of starting off with just a really small account and watching it, get $10 a month, $50 a month, then hitting the triple digits. And now this month of September, I'm going to be, the four digits, $1,000, and how exciting it is. And I get the same answer from everybody. I wish I could make an extra $1,000 a month. And I said, you can
easily.
You can.
Yep. Yeah. Anything else you think we should discuss?
Well,
plans for September, for the rest of the month?
Boy.
Just keep buying.
I keep buying.
Yeah.
Keeping an eye on what's myself because I do have that little gambling side. I'm going to keep an eye on what's going on in the U.S. I think what goes down there obviously affects us. Are they going to have a crap market crash down there in the next 3 months? I sort of get a feeling a little bit that things are going to turn a little more south down there, and stocks are going to crash a bit.
Yeah, I did get a message from somebody saying something about the R word, recession,
Yeah,
which I don't know. I've been hearing that for about the last 5 years now that we're going to have a recession. Still,
yeah, hasn't happened.
I think we've been in one. We've been in. We've been out. It doesn't really matter, guys. We just keep buying, and when what we love goes on sale, we buy more.
That's it.
Right? That's what we try to do. We try to buy more, and sometimes we mitigate risk by buying some of the safer ETFs, right? You don't always have to buy the high yield ones. Sometimes you can buy the lower yielding ones that are a little bit safer. Shawn, by any chance, do you have any MSTE?
I do. I think MSTE is my largest holding.
Yeah.
I think I'm around 750 shares of it.
Yeah, it's my second largest position. So how do you feel now that it's tanked? I think it's below $13 a share.
Yeah. To me, it's a buying opportunity. I will be buying more next week.
Nice.
And I know MicroStrategies was trying to get included into the S&P 500, which they got declined. They're not going to be involved in it. I was really hoping they would because I think it really would have boomed their stock price and MSTE would have. I think it would have been a big positive for us. But they didn't. But that's okay. If Monday it goes red, I will be buying.
Yeah, it'll probably end up being oversold, right? And then if we catch the bottom, then we'll make some money on the way up. So
absolutely,
yeah, I think we'll be okay.
Yeah, I'm in this for the long run. I'm not. It's not a sprint for me. This
Do you have a number? Like how many shares you'd like to own? You already said it's your largest position.
It is.
So
it is.
percentage wise,
I think I would like it to be about 20 to 22% of my portfolio.
Okay,
I think that's a reasonable number.
What are you at now?
I am at. I would have to actually look.
It's about 10%. I think
I'm
around
at 11.
10%.
I think I'm at 11% of my.
That's probably between 10 and 15 would probably be pretty safe. I think.
Yeah. 20.2% of my portfolio. So
that might be your. Is that what it was? Here, go back. I'll show you another way to do it. Sure. I'm gonna show Shawn how to use stock events. Hold on a sec. Go to holdings. Click on analytics. Click on that.
Oh, that's the better way. Yeah, 20.2%.
There you go. It is 20%, and GME's 18%. All right.
I'm a big gambler.
Yeah, let's hope GME pops so that Shawn can sell a lot of shares and make a lot of money.
Yeah, guys, I have 275 shares of it. If everybody could root for me, maybe buy a few, bring up the price.
Yeah,
I would really appreciate it.
Anyways, guys, we're probably going to wrap it up soon. Our wives are just walking the dog, and they're going to be coming back soon. But we really would like to say thank you to everybody who has supported us, who has subscribed to our channel, talks to us on Blossom, comments on our videos, sends us private messages, and just has been so positive that this doesn't even seem like work. It's just fun for us. We love talking to you, just like we talk to our friends, and we hope that everybody's doing well and making money. And sometimes we get some negative comments, but we can brush that off. It is what it is. We try to be positive. We try to respond to people and explain what it is we're doing. And we hope that they're doing well as well. Like we don't care what kind of investing you do as long as you're making money. Yep. And that's all we want is people to treat us the same way.
Exactly. Any negative comments I've ever had, I just say, hey, thanks for the comment. I appreciate it. But here's how I view it. That's all. Different points of view. Nobody's wrong. It's just how you see things.
And we are going to be going to the Blossom event in Toronto.
Looking forward to it.
If you guys are there, please come up and introduce yourself. We want to meet everybody as much as possible. And we look forward to seeing you there. But remember, guys, we are not financial advisors. We're just two regular guys. As you know, I'm officially retired at the moment. I haven't worked only in a week, but anyways. And Shawn's hoping to get retired as soon as possible.
GME pays off.
Just do your own research, watch lots of videos, consult a financial advisor if you have to.
Just make sure those videos are Better Call Paul videos.
Yeah. But yeah, just, make sure you do your due diligence and don't just blindly follow us, okay? Because you have to know what you're investing in.
And guys, girls, this is fun.
Yeah.
Have fun. It's serious business because it is your money, but have fun with it.
Yeah. All right, guys. We hope everybody enjoys the rest of the weekend, and we'll talk to you later.
Cheers.
Yep.
Have a great weekend.
Bye for now.